What's up, future millionaires? Degu Melaku here, and let's be real, diving into the world of business can feel like navigating a maze, blindfolded. But guess what? There's a compass, a roadmap, a secret weapon that can guide you to success financial sheets. Now, before you click away thinking this is some boring accounting lecture, trust me, this is about unlocking the secrets to making your business thrive. Financial sheets are like X-rays for your company, revealing the good, the bad, and everything in between. They tell the story of your business's journey, showing you where you've been, where you are, and most importantly, where you can go. In this video, we're breaking down the 5 essential financial sheets that every single business owner, whether you're running a startup or a Fortune 500 company, needs to understand. We're talking income statements, balance sheets, cash flow statements, statements of changes in equity, and budgets. Mastering these will give you the power to make smart decisions, secure funding, and ultimately achieve your business dreams. So let's dive in. First up, we've got the income statement, also known as the profit and loss statement. Think of this as your business's report card, showing you how much money you made, revenue, and how much you spent expenses over a specific period, like a month, a quarter, or a year. It's all about tracking profitability, and let me tell you, seeing that net income in the black is a feeling like no other. Now, the income statement breaks down your financials into key sections. You've got your revenue at the top, which is the money you generate from selling your products or services. Next comes the cost of goods sold, which includes all the direct costs associated with producing those goods or services. Subtract that from your revenue, and boom, you've got your gross profit. But hold on, we're not done yet. We still need to factor in your operating expenses, which are all the costs of actually running your business, like rent, salaries, marketing, you name it. Subtract your operating expenses from your gross profit and you arrive at your net income, the holy grail of the income statement. This tells you how much profit you actually made after all your expenses are accounted for. Next up, we've got the balance sheet, which is like a snapshot of your company's financial health at a specific point in time. Think of it as a financial selfie. It tells you everything you own, assets, everything you owe, liabilities, and what's left over for you, the owner equity. On the asset side, we're talking about everything your business owns that has value, like cash, inventory, equipment, even those sweet intellectual property rights. On the flip side, we have liabilities, which represent all the debts your business owes to others, like loans, accounts payable, and any outstanding bills. Now here's the equation that makes the balance sheet tick. Assets equals liabilities plus equity. This fundamental accounting equation tells us that everything your business owns, assets, is either financed by debt, liabilities, or by the owner's investments, equity. Understanding this relationship is key to making strategic financial decisions. Now let's talk about the cash flow statement, which is all about tracking the movement of cash in and out of your business. Think of it like your business's bank account statement on steroids. This statement is crucial because it tells you whether you have enough cash on hand to cover your expenses, invest in growth opportunities, and weather any financial storms that might come your way. The cash flow statement breaks down your cash flow into 3 main categories: operating activities, investing activities, and financing activities. Operating activities focus on the cash flow generated from your core business operations like sales and expenses. Investing activities track the cash flow related to investments like buying or selling equipment or property. And finally, financing activities cover cash flow from activities like borrowing or repaying loans, issuing stock, or paying dividends. The cash flow statement is all about understanding where your cash is coming from and where it's going. By analyzing this statement, you can identify potential cash flow problems early on and make adjustments to ensure your business stays afloat. Remember, cash flow is king in the business world. Now let's unravel the mystery of the statement of changes in equity. This statement tracks the ins and outs of your equity over a specific period. Remember equity from the balance sheet? It represents the owner's stake in the company. This statement breaks down the changes in equity into several components, starting with your beginning equity balance, which is simply the equity you had at the start of the period. Then we have additions to equity, which can come from things like profits generated during the period or new investments made by owners. On the flip side, we have deductions from equity, which can include things like losses incurred during the period or distributions paid out to owners. The statement of changes in equity is like a detective's log, tracing every dollar of equity back to its source. This statement is especially important for businesses with multiple owners or those looking to secure funding, as it provides transparency into how equity is being managed and distributed. Last but not least, let's talk about the unsung hero of financial planning, the budget. This is your financial game plan, outlining your expected revenue and expenses over a specific period, typically a year. Think of it as your financial roadmap, guiding you towards your financial goals. A well-crafted budget includes detailed projections for your revenue, broken down by product or service. It also includes a comprehensive list of your anticipated expenses, categorized by department or function. But here's the key. A good budget doesn't just stop at projections. It also includes a variance analysis, which compares your actual results to your budgeted amounts. This variance analysis helps you identify areas where you're overspending or underspending, allowing you to make adjustments and stay on track. Creating and sticking to a budget is crucial for making informed financial decisions, controlling costs, and ultimately achieving your business goals. And there you have it, the 5 essential financial sheets every business owner needs to know. Look, I get it. Financial statements might not be the most glamorous part of running a business, but trust me, they're the key to unlocking your financial success. Think of these statements as your financial dashboard, providing you with the insights you need to steer your business in the right direction. By understanding these reports, you'll be able to make data-driven decisions, secure funding, and ultimately achieve your entrepreneurial dreams. So what are you waiting for? Dive into those financial statements, get to know your numbers, and watch your business soar. And hey, if you found this video helpful, don't forget to hit that like button and subscribe for more business and finance tips. Until next time, keep hustling and stay financially savvy.